Money is not just earned, it is understood. Welcome to MWH tutorial where accounting, economics and finance are made simple. Today we are going to continue with our series on solving WAEC past questions. Still on 2026 question 5. The question is about depreciation of non-current asset or fixed asset. So here is the question. Abo Enterprises bought a computer for $200. The D here means dollars, stand for Gambian currency, dollars. $200 on 1st January 2021. The scrap value was estimated at $40,000. With an expected lifespan of 8 years, it was later sold on 31st December 2024 for $133,000. You are required to prepare A. Computer account, B. Provision for depreciation account, C. Computer disposal account, D. Profit and loss account extract. So these are the things we are required to prepare for this particular question. Let's dive straight into the solution. The first thing we need to do is determine the annual depreciation. Annual depreciation is equals to costs. Cost, this is what the amount you purchase the assets. That is 200,000. We purchase the asset $200,000 minus residual value Residual value, this is the value, estimated value of an asset at the end of its useful life. After you have used the asset for, let's say, 8 years as given in this question, at the end, what will be the value of that asset? That's what we call the value of that asset at that particular time is what we call residual value or estimated value. Divide by useful life of an asset. Useful life divided by useful life, that is how long will the asset going to stay according to how we estimated. So let's just insert the figures and get our answers. This will be equivalent to cost. Our cost is $200,000. $200,000 minus residual value. The residual value is 40,000 given in the question. 40,000 all over useful life of an asset, 8 years. 8 years. 200,000 minus 40,000, we have 160,000. 160,000 divided by 8, we are going to have $20,000. This is our annual depreciation. This is to tell you our assets, that is computer, will lose its value of $20 every year. So now let's start with computer account. Debit, dollars is here, credit, computer account, computer account. Here, remember our normal rules we introduced? We said real accounts has a simple rule. The rule said debit what comes in, credit what goes out. Here, we bought an asset on 1st January, $200,000. So therefore, 1st January, come and record it because debit what comes in, asset comes in. Come on, debit 1st January. Let's say cash, $200,000 is dollars. And the same rule that said debit what comes in is also say credit what goes out. You are told that the asset was sold 20 at the end of the 2024. So therefore, we are going to also credit the same computer account. Come on, say 31st December 2024. Come on, write disposal. Disposal of what? Of an asset. But here, you are going to write the value of an asset, not the amount the asset was sold. Come on, write $200,000 is $200,000. Close the account. You are done with this account. You are done with computer accounts. It just shows that an asset has come and some assets left. Now you have to open provision for depreciation account. Provision for depreciation account. Debit, credit, dollars, provision for depreciation account. Here you are to show the annual depreciation you've charged yearly. So let's start. We are going to credit annual depreciation provision for depreciation accounts, and the corresponding entry should go to profit or loss account. Since the correspond is going to profit or loss account, you know the name that we should appear here is profit or loss account. So therefore, we are going to start. We charge depreciation at the end of each year. Come and say 2021, 2021. Come and say 31st December. Profit or loss account. Because the corresponding entry goes there. The amount of our annual depreciation is fixed $20,000 every year. Look at it here. We charge it here. So come and write 20,000 here. We are done with this. Then you bring this at the end of the year as your balance CD. 31st December balance CD. Come on, write $20,000. Close the account here. Close the account. You come and start your 2022. 2022. 2022. You bring this your balance CD as your balance BD in 2021. That is your 1st January. 1st January balance BD. This 20,000 is your balance BD now. It's your balance BD. Then you charge depreciation for this current year, that is 2022. Come and say 31st December profit or loss. The depreciation remain unchanged 20,000. Then you have the summation. 20 plus 20, you have 40,000. Close the account here, you have 40,000. Then you bring this same amount as your balance CD here. Balance CD here, 40,000. You are done with year 2022. We are moving to year 2023. You come to year 2023. 2023. What next? Bring this as your balance BD. 1st January. Balance BD. You bring this 40,000. Then you charge depreciation for 2023. That is 31st December. We charge depreciation at the end of the year. Profits or loss 20,000. 40,000 plus 20,000, you have 60,000. Then you 60,000. You come up, say 31st December, balance CD 60,000. Then you charge the last year 2024. 2024. You bring this balance CD as your balance BD for 2024. Say 1st January. 1st January, balance BD 60,000. Then you charge depreciation for 2024. 31st December profits or loss 20,000. So mention this plus this, you have 80,000. Close the account. Close the account. 80,000. Come on, say balance 31st December. Balance CD 80,000. This will be your balance BD for 2025. So that's all as far as provision for depreciation account is concerned. The next thing is to prepare our computer disposal account. Computer disposal account. Let's clean the board. The essence of this is determine. The essence of computer disposal account is determine if we make any profit by selling an asset or not. Is it profit or loss? That's what we are going to determine from computer disposal account. So now, debit, credit. Yeah. computer disposal account. Your dollars is sign. So computer disposal account is just like we are going to transfer what we wrote in our computer account in the beginning. So we are going to bring it to our debit side here in computer account. The balance, the amount we purchased the computer earlier was January. Cash, come and write the same 200,000. 200,000. Then you are now to bring the accumulated depreciation. When we say the accumulated depreciation, we mean the total depreciation charged throughout the period. The total depreciation is 20,000 plus 20,000 for 4 years. We have 80,000. This is the accumulated depreciation. So you have to bring it here. I want to say provision for depreciation. Provision for depreciation. Let me leave it here because of the space. 80,000. Provision for depreciation 80,000. What remain? An asset of 200,000. It loses its value of 80,000. What do we expect? We are expecting our remaining balance to be $120,000. But luckily, we sold the assets $133,000. That means there is probably you make some gain. So we are going to write it here. The amount we sold the asset $133,000. This is disposal. Come on, write disposal. Disposal. This plus this 213,000. Here, the difference of 13,000 between 213,000 and 200,000 should come here now. 13,000. This is what you call profit or loss. But this one is normally profit. It's profit actually. But because it will go to the credit side of profit or loss account. So therefore this is a profit. So we are done with computer disposal account. That's all. As simple as that. The next thing is profit and loss account extract. Let's drive it here. Extract. So here is just our normal profit and loss account. Debit expenses, credit the incomes. Let's start. 2021 depreciation 20,000. We are done with this. 2022 depreciation 20,000, because we charge 20,000 throughout the period. 2023 depreciation 2024 depreciation. Remember, I told you what we had in our provision for depreciation account. This should be the corresponding entry. We credited provision for depreciation account with this amount. Now we are debiting profit or loss account with the same amount. So 20,000, 2024. And this one, profit or loss, this is a profit I told you. So therefore, we are going to bring it here as disposal. Disposal. Disposal of an asset, that is 13. This is a profit. So you don't have to close the account, you don't have to do anything, you are done as far as this question is concerned. That's all. I hope you enjoyed the class. Let me know the next question you want me to solve in the next class. Thank you.